Good morning, everyone, and welcome to the European crossover webinar. And we have the IFO business coming out. I don't know why it has it. Okay, see, actually just printed 97.4, but pretty much in line here on German IFO. Looking out ahead, coming into the States, actually, it's a relatively quiet session. We do have National Activity Index at 8:30 Eastern. And we have some Mexican data at 9 a.m. Eastern, but that's pretty much it. Well, Dallas Fed Manufacturing Business Index, which does move the market a little bit at 10:30 Eastern this morning, but relatively quiet session. National activity at 8:30 and Dallas Fed at 10:30. Well, we've seen the euro going and hit our levels. We had actually on Friday, this was our target, the 1372, and we did go in and make it there, and we've actually pushed a little bit higher into this lower zone, which is this 1389 area here. Actually appears to be right where the market actually ran out of gas, right to the pip, but this whole area is a good resistance level here in the euro, right here. Taking a look at the dollar index. We almost made it here to the major 23%, major in the sense that it comes all the way back from 88.25 all the way to 98.37. So a little bit of support in here. We'll go over the analysis for all the pairs, but this is a key area here, just a little bit low for the dollar. We've already had a pretty decent little stretch here in the euro. We'll go in and take a look at those. We've even had the cable make a little bit of a run here. We'll go in and get into the news, and then we'll go into the analysis. Let's see here. The Australian dollars and New Zealand dollars are firm, and the RBNZ plays second fiddle to the Fed. The Australian and New Zealand dollars edged higher on Monday as their U.S. counterparts were undermined by aggressive wagers on rate cuts from the Federal Reserve, which offset any bearishness for the probability of policy easing at home. The Aussie was up at 69.57 and trying to string together a fifth straight session of gains, having bounced from as low as 68.32 last week. Remember, we had support. We've been looking for that area there, 68.31. The Kiwi had held at 69.56 and had some way from its recent rough of 64.88. Faces resistance at 66.05. It also faces a hurdle on Wednesday when the Reserve Bank of New Zealand holds a policy meeting, which it's expected to hold rates steady but echo the dovish sentiments of other central banks, if only to stop the Kiwi from firming further. With central banks looking at stimulus, pressures building on the RBNZ to follow or risk a backlash in financial markets, said Kiwi Bank Chief Economist Jared Kurd. Central banks are worried that other central banks will beat them to the punch by cutting more aggressively. Indeed, the market has already moved to price in more than 100 basis points of U.S. cuts by the Federal Reserve, outstripping the expectations for both the RBNZ and the RBA. All of a sudden, the large interest rate advantage or disadvantage New Zealand has to the U.S. evaporates this curve. U.S. rates are likely to fall towards ours, and the evaporation of the differential has been the driver of Kiwi currency strength. Investors are pricing another 50 basis points of RBNZ easing to 1% by the year end. Futures imply greater than 80% chance that the RBA will cut again at its meeting next week and take rates down 50 basis points to 75%, or 0.75%, I should say. As a result, yields on Australian 10-year paper had an all-time low of 1.296 last week, having fallen a huge 110 basis points since November. The euro reaches a 3-month high as the dollar sags on Fed easing. The euro advanced to a 3-month high against the dollar on Monday as bearish bets on the U.S. economy remained solid after the Federal Reserve signaled last week it could cut interest rates soon. The euro stressed its rally last week when it added 1.4%, rose about 0.15. The dollar index versus a basket of major currencies was a shade lower at 96.10, having struck 96.09 on Friday, its lowest since March 21st, after the Fed last week opened the door for a potential rate cut as early as next month. That weighed on the dollar and in turn reinvigorated its counterparts, such as the euro, which has had trouble of its own, including Italy's debt problem and the possibility of the European Central Bank having eased its policy. It is true that the ECB may have to ease policy, especially with the Fed having shifted to an easing bias, said Yukio Ishizuki. But the ECB already employs a negative interest rate policy and does not have much further room to ease, even if they wanted to, unlike the Fed. It's a factor like these that seemingly supported the euro. The dollar nudged up to 110 to 107.39.5 yen. The U.S. currency was pressured against the yen, which often serves as a safe haven in times of political angst as traders' tensions grew between Iran and the United States. But it's difficult seeing the greenback fall beyond 105 yen as a sustained flight from dollar assets was unlikely. For example, the S&P 500 reached a record high thanks to the prospective rate cuts. Strong investor risk appetite shows any flight to quality into the yen. In focus was whether Washington and Beijing can resolve the trade dispute at a summit in Japan this week of leaders from the group of 20. Both China and the U.S. Have made compromises in trade talks, said Chinese Vice Minister Wang Shouwen. The Australian dollar hit a high of 69.61. Comments were perceived to be slightly less dovish last week when Lowe said the recent cut in Australian interest rate cuts to an all-time high would not be enough to revive economic growth. The Aussie was already on steady footing after rebounding from a 5-month low of 68.32. And lastly, the dollar struggles after the biggest weekly drop in 4 months. The greenback has been on the receiving end of the broad market sell-off in major currencies as global central banks, led by the Federal Reserve, signal a dovish outlook on monetary policy. But the sell-off has raised concerns that markets have turned excessively bearish against the dollar, especially since the Fed has been the most room to cut interest rates relative to its peers, such as the European Central Bank, where rates are already in negative territory. U.S. rates are still higher than any country's rates, and U.S. bond yields are not likely to go negative anytime soon, whereas other countries' yields are already negative far out into the curve. It's the best of a bad bunch. While hedge funds have turned mildly bearish on the outlook for the dollar, in the latest weekly positionings, they have ramped up bearish bets against other currencies such as the Aussie dollar and fears of rising challenges for the global economy. So let's go on and move into the bias chart and take a look where we're standing. So looking here with the euro dollar, we had 1372 as the one area that was our target as far as when you looked at where the market could go to. 1377 is 38% of the entire move of 1108 to 1815, and 1378 is 78% of 1108 to the most recent high of 1448. So the analysis ahead, we were put in here. The U.S. reached the interim target of 1372, confluence with 1377 to 78%, 38% of 1108 to 1815, and 1378 to 78%. Risk reward diminishes over the short term at this valuation. Upside resistance zone is 1389 to 1413. Initial daily support is 1326, followed by 1291. So we can also take a look at the 2-hour. We know we're into this zone here, and that's between 1389 to 1413. So we've got this zone here. We can jump in a little bit higher if we want. Let's move into the 2-hour. And you can see here, 1394 is actually going to be the 127% of this entire move of 1348, 1181, this dip in here. And also, you got this 1396 level coming in. So what we're going to do is we're going to go on and go with 1396 now. We can bump up in airs 1417, but we'll go with 1396 as our low resistance level for today. And for immediate support, well, that 1343 has been very key all along. We'll just drop this just a hair lower, move it to, let's call it 1337. 1337. And we'll move into the cable. Cable has closed a week above the resistance level of 2734, opening a challenge of major resistance at 2802. Beyond is 2842, which is a 38% of the move of 2508 to 3381. Initial support is 2681, followed by 2630. So let's go and mark off 2681 as our support. And we did get up as high as what? 26, 27, 60, 68. Let's take a look here on the 2-hour chart. We'll go with the high up here, 2781. But it's already kind of run out of gas right, right there's 58. Maybe as good as it can go for now. Hang on. I'll go 2768. And let's go and move into the Aussie dollar. Okay, the Aussie dollar is attempting to carve out a bottom. A daily close above 69.62 will provide confirmation of a daily for a bottoming, opening the challenge for a major level of 70.27 with initial target of 77. Support is 68.75. So we do need a daily close above 60. If we can get that daily close above here, 69.62, that would go and allow the market to actually have a bottom in place. Let's go marker over here. Go. That's actually where the market stopped. Look at that, 69.62. So let's mark that off here. There we go. We already had that marked off. And support. We'll go with there, 69.26. Let's go with the Kiwi. Says the Kiwi has found a double bottom if the market can close above 66.12, confluencing with the downtrend line. You can see that bumping up against here. Pull this a little bit. There we go. Support remains the key support level of 64.93. Resistance is major level of 66.91. So let's take a look here. So we need to get above that 66.12. Let's take a look at it on an intraday. All right, there at 66.15. We mentioned the 66.12, so we'll stay with that, 66.12. That's what needs to get a close above on the daily basis. The resistance comes in at 15, which is still called 12 anyway here. And support. We'll go right here, 65.55. I think we'd find support before then. Then we had that marked off previously. So let's take a look here at the dollar CAD. The dollar CAD bears have sent the pair careening towards a major support level, which is 31.36. You can see that here. Market has caught an oversold bid. Resistance comes in at 32.67. Pair would need 2 consecutive closes above 32.95 to worry bears. The next target is 31 even. So we're looking here. You can see here some initial resistance here coming at 33.26. Let's take a look here on the 2-hour chart. If it decides to make a little bit further run here, we did run out of gas here at 32.30. We'll give it a little bit of room here, go up to as high as 32.46, considering how oversold it is. My initial support here is going to come in at 31.70, initial support. And we'll go into the peso. The peso is marked in a well-defined range of 18.92 to 19.23.6. 2 consecutive daily closes above 19.23.6 will be to signal a bottom is in place. But you can see here, we're just stuck right in between these two right here. We're not going anywhere, so really no changes. I mean, it's just going to stay 23.6. And on the downside, you can look here, 18.99. So a little bit wider range than usual, but that's how it's trading right now. Not really going anywhere. Takes us to the dollar yen. The dollar yen continues its downward move towards the target of 676. Initial resistance is 778, followed by 856. So still relatively quiet here, but you can see here we've got 778. Unless things change, and they can, but for right now, we're just going to go with this 778 on a short-term basis. And on the downside, well, this is a big draw right here, a magnet to 676. Whether or not we try and make a pause here at 703, this is going to really draw the market if it wants to hang down, and we're going to just keep this for right now as that target the market wants to get to, which is 676. No changes there. We're seeing the euro now push higher in here. We can go back into the euro. One of the things we're looking at here, 1394 is 127%, and we've got 1396. So let's pull this back on the 2-hour. Right there, you see there? So 1396 and 1394 is 127%. Looks like we're pushing into newer highs right now. And when we look into the daily chart, and look at here, we'll take a look at the cash dollar index also. So you can see here with the euro, we're coming right into this zone here that I've got marked off. 1389, we're just above it, into 1413. And as I pointed out here, we already mentioned about we hit our interim target, which is 1372, confluence with the 1377, the 1378. You can see it right here. So we had these already two big fibs here. The market has already stretched quite a bit, but just says the risk reward diminishes over the short term of this value at this valuation, meaning, like I said, you can try and step in if longs are still getting paid, but at this point, we're pretty well stretched. Now, can we go a little bit higher? Yeah, that upside would be 1413. The market probably would look to take a little bit of a pause. So we'll see how far we can go. So if we're looking here, we got this resistance zone of 1389 to 1413. The market hasn't backed off very much since its push. But we do have, as I mentioned, 1396 coming in. We'll go into the 2-hour chart. 1394 is the 127% extension of this most recent range. There we go. So you can see right here, 127% here, right there at the 1394. Now, if we were to go all the way out, that would take us all the way to 1450 if we went to 161%. But I'm just saying, we're just looking for confluence right now. And we've got that here. And we got the 1396. Let's see what the high, we've just about tagged it here. So I had 1393. Yeah, 1393. So we've got this 161. Now, the market hasn't shown any signs of pushing back. We'll have to see what we do here. But as I mentioned, when you get to this valuation, the risk reward of trying to get long quickly diminishes here. I would look for the market myself to take a pause in this area. It's just a matter of how much further we can, if they want to push it a little bit higher. We'll go and move into the dollar index now. Says the dollar index bears are in full control as the index targets a move to 95.65. Initial support is 95.90 level, confluencing with 95.98, which is a 23% of the move all the way back to 88.25 to 98.37. So can we push a little bit higher or a little bit lower here, i.e. higher in the euro? Probably, but we're coming into some good support right here. As I mentioned, 95.98 would be the 23% of the entire move back from 88.25, the low on the detached dollar index, or most significant low, all the way up to 98.37. So we're getting a little bit stretched in the tooth, and you can also see 95.90 coming in right there. So you got some good resistance. Someone's got their alarms or whatever here, but right coming right across here. 95.90. So I think any push down here is going to go and offer an opportunity. I think, like I said, the euro may still be able to push a little bit higher. Let's take a look here. So we just closed this 30-minute bar up here. We just closed it, which took out these highs. So it opens the door for this to challenge a little bit higher. But once again, we've already stretched so far. You know, in a market like this, you don't want to necessarily come in and short it, but we have gone, look, we just hit the 1394. We'll see what we can do. But when the bar closes up like this, it really augurs for the market to test a little bit higher. How much higher? Well, 1396 is already a pretty good move here. So anybody that's short, now that if they put their stops above, they got stopped out. So the idea is you'd probably let the market try and test a little bit lower until it showed you it couldn't move any higher. And I'm thinking, like I said, to me, my initial support, 1343 has been huge. We talked about that. It would probably be, like I said, I think we have 1337 on the initial. Market's rather stretched. Can we stretch a little bit further? Yeah. We showed the zone, but also the cash dollar index has the opportunity to itself to go in and move a little bit lower in here. We've got 96.01 it can dip to, and also 95.95, which is on the 2-hour chart. I had these already drawn out here, right there. And we're looking at 95.98. Being the 23% back. So I think this whole area between 90 to 98, now whether or not it allows a euro, which it might, it may want to go in and clip and take out the 14. May just want to do that and say, you know what, let's trigger those stops. So maybe we see something like 1407 or something, but we are into resistance here in the euro. I've got marked off as 1396. Can we trip the stops? Yeah, but that's decent resistance level here. So we shall see if they can go and do that and see if they can run a little bit into gas, run out of gas up these upper levels. I'd be interested in catching a value short if we can get just above 114. Let's see what it does. I'm not trying to rush into anything, but like I said, that the thing is I think that with the cash dollar index, go back to the analysis, I think that we can make that move to 95.65. Here's my 95.65. That would also confluence with the 161% of this entire move here, 96.47 to 97.77 right here. We'll take a look at that. See that right there? But my thinking is that as we get closer to the G20 or in preparation or ahead of the G20, that you'll probably see some of these dollars being bought back. So my thinking is we can open up on Monday, and which we are, and maybe test the range of anybody that was short and really anybody that ends up getting short from down here on the cash dollar index. And that takes us down here, as I said, between the 90 and 98. We're already pushed pretty low, but down here. And then I think that we can settle and the market probably starts to bid the dollar back as we go towards the G20. We'll see how much further it can push. So let's go and move into the cross rates now. So look at the New Zealand yen. New Zealand yen is struggling to put a bottom in place at the lower level bracketed by 70.46 and 71.03. A drop to key level 70.20 remains in the cards. So right here, we're just bebopping around here. We're in this range and really no changes here. You can make the case at 70.67. If we go and switch this to a 2-hour chart. Right there. It's called 70.66. Let's go right there with 71.24. And let's go and move in now to the euro yen. Okay, with the euro yen after holding key support level 21.12, the pair closes its best level of the week on Friday. Initial upside target is 22.64. Support level is 21.59. So we're going to go with this 22.64, giving it that room to move higher. So a moment. And I just took a short there, 31.92. But I'll be looking to add a little bit higher. I just think we've come a long ways here in the euro. Might be a touch bit early, but hang on. And the one thing I'm looking at, and I'll just get to that real quickly, and support. We'll go right here, 21.83. So I took a short and I just want to go and point that out because I'm going with just a level here is two things. Although we did get a strong 30-minute close, so I got to give it that. So I'm just putting my toe in the water here, but we've got this zone here. So we're just above the 31.89, okay? And the 14.13, we did reach our target level. So I think people want to buy it, but they're going to say, you know what, I'll buy it on a dip. And then also, but that's just not enough because to me, I'm thinking, wait a minute, it did get a strong 30-minute close. Look at 30-minute, hey, it closed, so that's going to make it tough. But we did reach a target here. So which is, well, 31.96 is the next low, but I've got 31.94, which is 127% extension of this move we just showed. So that gives us, if you want to call it a soft target for the market. So yeah, I think this is, we'll find out whether the market can once again push above the 14s, and it may be able to. But as I mentioned, I think as we get towards G20, we'll be looking to go on and buy some dollars back. So we shall see. But anyway, I just want to point that out. Let me go on and move back into the crosses. But that was the technical reasons why I decided to go with that, even though we did just get a good solid 30-minute close on that. Let's go on and move in now to the Euro Aussie. Euro closed above key level 63.41. August for a move to 66 even. Confluence with 66.30 being the 127% extension of 63.58 to 53.48. Support is 63.41, followed by 63.07. This market has the opportunity to still continue to press higher at this point. When you look at this, if you look at it from a very, very short-term basis, well, the immediate target is going to be right here at 64.50. So we'll go with that for the immediate, which is the old highs, or the highs just recently set. So, but it really opens the door for this to move higher. Support will be right there. $63.52. Let's go to the Euro Kiwi. Just a moment. I was posting here that I got short on the euro in case someone didn't see or wouldn't listen on the webinar. But I think that's a good area. I'll spend more time on that. But so many people are trying to short this euro, and like I said, people kept pointing out this problem, that problem, blah 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 blah. Look, as I said well over a week ago, and I've even said 2 weeks ago, tell me something I don't already know. Okay. The euro is going higher as a de facto because of the dollar index. So it's not, if you can't stand the euro, whatever, it's not about the euro. It's about the dollar and the wholesale selling of the dollar. And we've only seen the first initial phases of dollar selling. As I mentioned in the analysis this last Friday, this is just dollar liquidation. We haven't seen real dollar selling yet. So it's going and move now into Euro New Zealand. The Euro New Zealand continues to work higher. Key resistance remains weekly level of 73.09, confluence with 73.05. A break of this level targets 75.05. So this thing can still move higher. We're going to go with 73.09 is our resistance. I'm actually going to post a chart of the euro. I know that I think Amanda's not here, so I think everybody's used to a lot of charts being posted. So I'll post a chart. And support, let's go into the euro. I'll give it some room. Let's go right there, 71.79. Let me just put something real quick. It'll be just a moment. Just going to post something in the room for a chart. There we go. So let's go and move in now to the Aussie. So it says with the ASEAN. The ASEAN is languishing at its lows with key level 74.02 keeping the downside in check. A break lower will target 72.75, which is a 78% of 70.58 to 80.72. Resistance is 74.96. So on the upside, here's the 74.73. Let's go into the 2-hour chart. Aussie's already had a pretty good run already. Yeah, let's just go on and we'll keep it right here. We'll keep it in check for now. 74.81. Maybe it needs a little bit of a pause. Support will come in right there at 74.35. If you're scalping, there's going to be some support for the euro coming in at 84. So anywhere between 85, if you want to grab yourself a few quick pips, and then maybe we jump back up and you have a chance to scalp it right back out again. Let's see. Now let's go move into the guppy. Okay, the guppy is attempting to put in a short-term bottom at major weekly level 36.02. Immediate resistance is 37.36. Pair needs a weekly close above 38.25 to mark a bottom. A break below support will target 34.60 to 78%. So let's take a look here. The 2-hour. Support's going to be right there, 36.42. Resistance 37.11. And Sterling versus the odd. Sterling odd is making a push to get above the weekly level 84.14. A weekly close above the target will target 88 cents. Immediate resistance is 84.56, which would go above that, and support is 83.25. Let's take a look here on the intraday. Go with resistance at 83.59. Intraday wise. And support 83.03. There we go. And there's the bias chart for today. I'll get that posted. Thanks for joining us here on the European Crossover webinar.